MPC's decision on the tips of all South Africans' tongues, we welcome Merina Willemse, economist at Efficient Group, of course, in studio with us. Merina, thank you so much for your time. Everyone's talking about a 50 basis point cut. Where do you stand? Some are even saying 100 basis points. But the question is, if we do see a cut, at the end of the day, is this going to be a signal for perhaps more cuts down the line?
Even though we believe that there might be a 50 basis points cut, I think that will be the last cut we see this year. There's a lot of economic data that came out the last few weeks that really support a cut. And our company view was actually that we didn't expect a cut again this year. But after the very low interest rate, inflation rate we saw, I think, yes, 50 basis point cut is on the line.
Why didn't you see a cut, though?
I think we saw a lot of... I think we perhaps didn't see inflation bottoming out as much as it did. I think everybody actually was surprised to see something lower than market expectations. So, and again, there is still a lot of pressure on inflation going forward. And I think that is the crucial point, that even though there might be a cut today, I think by next year we might see some surprising factors showing up. And then I know that Jill Marcus won't be afraid to lift it when it's necessary.
We know in the previous meeting, she was citing a lot of the external factors that could affect South Africa's growth. And, it was quite interesting to note that she was talking about US unemployment and the scenario that is playing out on a global level. Do you think it's just an inflation story now? Because the verbiage of the MPC lately has been about the unemployment scenario that is playing out and also the global weaknesses in terms of the recovery that we've been seeing.
It's definitely not only an inflation story. I think if it was only an inflation story, we'd have probably had a cut before. The previous MPC meetings, it was an international instability story. It was a rand strength story. And all those things definitely play a large role in the decision that MPC makes. And at this point in time, I think most international data released really support, at this point in time, a cut.
Looking at the possible scenarios that could play out, perhaps we won't see a cut. I was talking to Theo Forster. He says that is going to be a big risk if we do not see a cut today. What could play out on the currency front if we don't see any moves?
Well, I suspect markets will definitely react to that, because markets have already priced in a cut today, and I don't know what will influence what. I don't know if the market expectation will also weigh down on MPC's decision to cut, because they definitely put the expectation out there. I think that'll be a shock to the markets. The markets will probably react negatively towards that. But then again, I do not expect it not to be a cut.
Okay, well, if we do see a cut, at the end of the day, we were talking about it earlier with James Turpin. He was saying we won't really be seeing any move on the rand. But again, it's really got to do with the comments that come after that cut, whether we get something dovish or whether we get a cautious outlook. That would really be telling, yes, wouldn't it?
I think we're going to still get a dovish outlook, and then markets will just continue on the same trend it did before. At the moment, there's little that the Reserve Bank can do to really influence the level of the rand, and that's been a major influence in markets. And I think at the moment, things will probably just trend on the same it did for the past few weeks. Rand going stronger, markets lifting little by little.
Okay, something's got to give. How much longer do you think we're going to be seeing rand strength for? It is about the yields and the yield differentials that we've been seeing. Equity markets looking quite attractive, but it's interesting to note as well that if people start getting out of the bond market, a low interest rate environment could prompt people to go into the equity markets as well.
You are right, yes, but I think at this point in time it's an international story. Yields overseas are just, in terms of the bond market, just not as good as over here, and we're going to continue seeing money flowing in, either in bond markets or in equity markets, and this will drive the rand stronger in the short term, and I think this might continue indefinitely. It does depend on the international environment next year, so that will answer our question.
In the meantime, the South African Reserve Bank has been stepping up its reserve accumulation, and we saw dollar accumulation last month and gold as well. Do you think it's going to be enough? Do you think it's going to be a stopgap for the rand?
No. Short answer, no. We just don't have so much to buy. We're really a very small fish in a big sea, and we get swayed around by what happens overseas, and I don't think there's enough dollars we can really buy to influence it this way. Maybe interest rates will be a better way, but then again, we have the equity markets that will also be profitable.
Well, the National Treasury has also been relatively vocal about Tobin taxes and taxing portfolio inflows, and they're basically saying it's not the way to go, because at the end of the day, that is how we fund our deficit.
Absolutely.
As well.
I think that's a very important point. We have to be thankful for money flowing into this country at this point in time. We don't want to offend international investors by putting taxes out there or putting low interest rates that won't attract investors, because we need that money at this point in time to finance our debt. So I think it's important to realize that is a very important part in the game, and perhaps Rand strength at this time won't hurt us that much when you compare it to no money flowing in.
To what extent do the wage negotiations that we've been seeing going to have an impact on the MPC rate decision today?
I think it will definitely have an impact. For the private sector strikes, there you'd see people earning more money and they would be able to spend more in the markets. But when you get to something like the car manufacturing people striking, that's putting definite pressure on PPI, leading and lagging into CPI, and that will have an effect on their decisions going forward. For sure.
But at the end of the day, we also want to, because we keep talking about how the interest rate decision is going to affect our currency, because we would like to see those yields being changed. But at the end of the day, it's also about consumer demand in South Africa, and the fact that we haven't really recovered to great levels. We would like to see some more spending and perhaps more credit demand coming through. What kind of impact would a 50 basis point rate cut have? Because at the end of the day, it is down the line. Perhaps a 100 basis point would have a better effect.
It would, of course, have a better effect if you're debt laden, but I think you have to remember, I still believe 50 basis points will be there, and we won't see, I don't think it's going to affect consumer spending or private sector credit extensions that much at this point in time. Our interest rates are already very low, and people are actually, they are very wary of taking on even more debt. But slowly but surely we're seeing some surprising good results from consumer demand and consumer spending. And I think we just have to give it a bit more time. We came out of a really bad recession, just give it a bit more time, and we're probably going to see some nice figures by probably half next year.
Unemployment versus the growth scenario that we've been seeing, because we are growing now and we're going to be growing for 2010, 2011 and going forward, is that going to be enough to start seeing the unemployment rate in South Africa come down?
I hope so. I am not too positive on what's going to happen with unemployment, because it is a much bigger problem than just growing. Like for next year, we're not going to be growing that much even to counter our unemployment rate. And it's a bigger and a larger long-term framework kind of problem. But the most important thing is to get the economy growing. That is the only way that we can solve this problem.
World Cup has come and gone, and it was a fantastic time for South Africa, but unfortunately we haven't really seen a big impact on the South African economy. Some say we have, others say they're relatively divided. What is your view?
I believe we're going to see impacts for years to come still. And that is the real benefit to this. It's not an immediate thing, and we often overestimate things, and I think we might have done that in short-term view, but over the long term I think we're going to get good returns in terms of our tourist industry and foreign investment.
All right, Merina, just very quickly, also looking at the global interest rate environment, as we said, Canada looking to hike rates once again, Australia, Bank of Korea not really making a move, the Swiss National Bank hiking rates by 0.25%. So again, we're seeing quite a lot of different things playing out on a global level, but at the end of the day, we've also got that coupled with stimulus. Are you concerned about the rate of the global recovery?
Yes, I think everybody is concerned about that. I don't think it's going to be something that can be resolved with interest rates. Only time will tell, and I think over time, especially by next year, the global interest rate cycle will definitely start turning around. It's already started, as you mentioned, and most overseas countries and over here are going to start lifting rates, and that is something that we have to focus on when we think about just pushing it down today. It's going to make it harder it's going to be worse, then we have to lift it up more next year.
Merina, we have to leave it there. Thank you very much for your time.